Good morning. Today is Wednesday, January 21st. And here is the pre-market live analysis for the broader markets, economic data, and the Tesla levels in the 5-minute opening range trade. So let's get into it. Hey, good morning there, Anthony. Today, big thing that's happening right now, President Trump is speaking in Davos in Switzerland right now, talking about the economic situations that are happening out there in the world with the geopolitical stuff that's happening. I think the biggest newsworthy stuff that's impacting the markets right now is Greenland and the tariff threats that happened over the weekend. I think personally that short term it's a buying opportunity. I don't, for every stock to get slammed like it did, it has nothing to do with fundamentals of the stock. So I just think it's creating an opportunity for buying these dips right now. So as far as later on today, you have pending home sales at 9 o'clock, construction spending month over month. That's going to be it for today. I think the big focus, though, is going to be on the words that come out of President Trump's mouth that will move the market here. So tomorrow, final GDP numbers. Now, keep in mind these numbers are if you go on a Forex Factory, all this economic data is free. And when you click on this and you go on the calendar and you can click on the folders. So the red folders tell you that, okay, when the number is about to come out, that whatever kind of report is going to be said could impact the market. So now if you click on this, folder, it tells you what it is, what that number is going to be. Now, mind you, these numbers that are coming out right now, they're 34 days delayed because of the government shutdown. So these numbers are already way behind right now. When you see this little orange star here, on here, there are numbers that are coming out right now, but they're still behind on gathering this data right now. So I would say that the GDP quarter over quarter is important, but I think the unemployment claims will probably have a little more impact on versus the GDP on Thursday. However, core PCE price index, even though that's going to be behind, that may impact the market. Personal income, even though it's not a red folder, I think that could impact the market as well as personal spending month over month. And then you've got core PCE index month over month, and of course this is October's data as well. You can see all of these numbers that are coming out here are from October, and that's going to be for tomorrow. So that there should be quite some movement based off of those numbers tomorrow. Friday. I don't see much on Friday. You've got flash manufacturing PMI, flash services PMI, and then you revised University of Michigan consumer sentiment and inflation expectations. So that being said, let's get into the broader markets. If you're new to the channel, please subscribe to the channel and hit that thumbs up button. Let's get into the ES. We always start with the S&Ps. So we are definitely approaching some support levels here. This orange rectangle that I have here, this is a gap level that was set from, I think it's probably back in November. We can take a look and see how far back this goes. Go 180 days. Then we can go back here and see how far back that gap was created. So this gap was created right back here in December. So we gapped up. This is pre-market. So we closed here. This is where we closed. And then we opened up right at this level right here. So created a little gap, even though you could see this post-market and pre-market trading that was there. If you take away the, if you go here in the futures and you get rid of the after-hour trading here, it will show you a cleaner view of that gap up there. You can see that it shows you a nice gap up. So I like to see those gap up fills. You could see like this would have been a gap up here, and the market gapped up there, and then it came back down and filled that gap, just as it created a gap down. So like, for example, like this is a gap up here. So this created a gap up here, and then it came down and filled this gap, as you'll be able to see right down in here. And so now yesterday we created a nice little gap up, gap down rather. So that's going to be that'll stay open until it fills. It doesn't necessarily mean it's going to fill today. However, we keep these gap opens until they fill, and then I take them off the chart. This September high of 68.14.5 seems to be holding right now in pre-market. I can show you what's happening in pre-market futures. Okay, so we're holding that right now. If we lose that level, I think if we lose that 68.14.5, I think we're going to come back down to the 67.95.62 level. If we lose that, you have the 67.71.5, which is December's lows, that you could potentially test that. And then if you lose those, that 67.71.5 level, and which is December lows, you could pull all the way back down to August highs, 66.39.25, and test that. On the upside, if you do get some kind of push after what President Trump speaks, and if he pushes the market, I would say you got to push into the 68.66.75 level before you maybe get a little resistance in the morning. This is the lower end of the regressional trend line. We lost that level. I would anticipate if the market does push up into this 68.77.63, you may get a little reaction there, a little sell reaction there on the downside. If you do push through there, I would anticipate a 68.99.5 rejection, for a little rejection there, because it is January 5th's low, and so this would be treated as a break and retest. So you broke that low, come back up here and test that for a break and retest for a low. However, you still have this open gap from the gap down from yesterday, so that is to keep in mind. So that'll stay up on the charts here. If we take a look at the SMAs here, we are below the 100-day SMA now on the ES. So that's negative right now, so it's not bullish. So in order for us to push higher, we're going to have to get above that 68.31.27 first. But you have all kinds of levels here that are going to be in your face, giving you some headwinds. You're going to have yesterday's close here at 68.37.5. Opening trade 68.39. You have the VWAP sitting here at 68.41.25. Call it. And then you have these previous lows, weekly low from December 29th at 68.86.75. Then this regressional trend line will come into play, sitting here at 68.78.48. Then you have the 50-day SMA at 68.93.12. So there's quite a few, some headwinds up top here in order for us to get pushing higher again. So we are below all these SMAs right now. So right now everything is bearish. So you have to your play, even though we are definitely pulling back to some support levels. The plays today are pop and fades unless you get some extreme volumes that push through all these levels. And then if you push through these levels, and then you see how the market, what kind of price action you get here if it holds, to continue to push higher right now. But with all this sentiment that's happening right now, you could just see we're making lower lows. We're making lower highs. There's a high. That's a lower high from here. It's a lower low from here. So everything is definitely, unfortunately, trending lower. But if we fan out and you look at it holistically, it's not horrible, but we are definitely breaking down. And you have to pay attention to this breakdown right now. We lost this lower end regressional trend line, which I did not like. However, I can get recouped fairly quickly with a few positive words that President Trump he's actually speaking as right now. So we'll see if the market's going to respond positively when he starts speaking. They're probably going to hang on every word. He actually just started speaking right now. So we'll see how that impacts things right now. So let's get over into the NASDAQ. Again, if you're new to the channel, hit that subscribe button to get future videos, and hit that thumbs up button as well. NASDAQ, it's a very similar chart, definitely more aggressive on the downside due to 50% of tech being in the index here. So you can see we lost these lows. These lows now will become resistance levels. This is a previous gap right now that we're filling. And I would say we can go back and take a look and see when this gap was filled also. I would say, or when this gap was started. This gap was started back here. Same gap up. December 17th is when this gap originated. And now we're starting to fill this gap up now. So we're in it right now. So here's a level, you'd like to see this level 25,053 hold right now for support. It's starting to hold a little bit right now. If we lose that level, we come down to 24,977.14, and that would complete the gap fill, the gap up fill. And then hopefully you could possibly move higher there. You probably, once the market opens, you may get a little resistance here at this 25,125.25. So you can see if you pop through that, then you can push higher and then maybe get into this 25,270.75 before you get a little resistance there. And again, we are below this lower end regressional trend line. If you go to the 4-hour chart and you see where we're at here, we need to regain these levels right here. So these levels will act as resistance now that we lost them. They were support. Here was support, and now we lost it, and you can see they are acting as resistance now. So in order for us to move higher, we're going to have to regain this level here at 25,439.78. As far as downside is concerned, if we lose that 24,997.14, we have a support level down here, 24,887.75. And if we lose that 24,887.75, I think we quickly, unfortunately, move down to this 24,680. And I say quickly because there's really nothing holding this up down here. This was a quick move up. Not a lot. It was not a not a lot of buying in that area right there. So I would be concerned if we do lose that area right there. So that area being this 24,887.75 is going to be a key area if the market pulls back to that. You're going to need to hold those December lows. If you lose that, 24,680 could be in the picture. So that's going to be my views for the NASDAQ. We could take a look at the SMAs. You can see we're well below these moving averages, and we're well below the 100-day SMA. So if you do pop, these are going to be resistance levels right here. 25,339.87 will be your first level. Actually, your first level is going to be this September high, 25,270.75, and then if you pop through there, you'll get some resistance levels at this 100-day SMA. So everything is bearish right now. When you're below your moving averages, your bias and your plays should always be pop and fades, meaning pop and fades, meaning that if the market rallies, you're looking for areas to short the market, right? Or if you have your good levels and the market sells off, you're waiting for levels to take it, to get in front and take your positions to go long, right? So all kinds of ways to play this. However, it's looking, the sell-off is here right now. Are we in a bearish market? I would not say we're in a bearish market right now. I think that there's some opportunities right now to be buying these dips due to the fact that it's not horrible fundamentals, because if you look at we're in earnings seasons right now, and about 76% of the companies are beating earnings with great forecasts on the horizon too. So that's something to keep in mind too. So when you have something that there's tweets that happen over the weekend that impact the market coming in off of a holiday weekend, to me, I look at that as buying opportunities. So I would not be surprised if we get some downward pressure early in the morning today and later on in the afternoon that we start turning higher. But who knows? If you have a crystal ball, that would be fantastic. But one thing to pay attention to, you can take a look at yesterday's trading. You could see how we respected this lower end regressional trend line like a champ. Tried pushing through it. This is a 15-minute chart, by the way, we're looking at, and it rejected it, like a rock star, and boom, came off it. So that's definitely going to still be a great level right there. So hopefully Trump will say something positive, but who knows what he's going to say that can impact the market. So let's get into Tesla right now. Again, if you're new to the channel, hit that subscribe button and like this video. Let's get to a regular Tesla here. So sometimes what I do, if I'm having trouble reading a chart, I just want to point this out. I don't know if you have a Thinkorswim platform or not, but there's a way to put your chart, put your equity up here, have an inverse view of it. So I'm looking at it right now, and sometimes, you know, you look at these charts day in and day out, sometimes you have trouble looking at it. And if you look at it in different views, sometimes it really helps. So if you put a negative sign in front of any equity up here, it makes the chart inverse, right? So if I put a negative sign in front of Tesla here, it now is showing Tesla inverse right now. So it's showing as it's going up, it's actually a downward. You know, so right now it's showing a negative 419, right? So if this chart was moving down, it's actually moving positively, right? So now I'm looking at it, pretending like, okay, well, this looks like it's actually moving up. Well, what would I be doing? I'd be looking for pullback longs, right? So the same thing now, I have to now change my mindset for this, that even though I had been bullish on Tesla for the longest time now I have to go back to the regular chart. If I'm looking for pullback longs here, now if I go back to the regular chart on Tesla, I have to be looking for, you know, pop and fades, right? So I'm now looking for Tesla to give us a little pop and to be selling it short today, just like the rest of the markets. So if I look at Tesla, where we're at right now, let's go look at the clean point of controls. We created a nice point of control that's open from yesterday at 425.33. So I'm going to have that level open. We are below 419.99 right now. We're hovering above, hovering just on that level right now. This is January of 2025's high. So in order for Tesla to pop above that, you're going to have to get above that level. You could lose this level right on the open, and that could be a level where you're going to take it short. I would anticipate this November 4th was a previous all-time high at 414.50. That was there since November of 2021, and then we broke that level last year, I believe it was. Or actually, I think it was 2024, we broke that level. So that level was up there for quite a while. So that's a significant level that I leave up there. So now the way I'm going to view this level is that this is a break and retest of that level, a longer break and retest. So now we broke that level, we rallied up to 499. Now we're coming back down. And so I would anticipate if we do pull back to this 414.5 level, I'd look to take a long here. This is my bias for today. And probably the week, and we're only $5 away from that level. So if we get there, I'd be looking to take a long here. And you know, you got to keep a short leash on it, because there are some levels, that open levels here. I've got some open gaps down here, 395. Like I was showing you before on the broader markets. If you go in here to the equities, and you can get a better picture of it. Just get rid of the after hours trading. It gives you a better view of where your gaps are, right? So you can see this gap down here from the other day. And then if I go here and I give us some time out, 180 days, that's good. I can go back and I can see this gap down here, I believe. Where was that gap? You see this gap right here was from November 21st. So that gap is open. And then not to mention, we have some open point of control levels that are open. I've got an open point of control at 365.90, and unfortunately, we have an open point of control at 333.78. So, you know, there's all kinds of levels that are open here that you have to pay attention to. So but this is all marked. This is my trading screen, and it looks kind of noisy for most people, but when I'm trading, I usually break this down and I'll have it down to a 5 minute, so I know where I'm making my trades, right? So I'm taking my trades, I'm scalping my positions. And so you can see how these certain levels that I have here, they react. So it lets me know where I can take a long and where I can take a short. That being said, before we move on there, let's take a look at where our moving averages are. So you can see we're below all of our moving averages here. Let me see if I can clean this up for everybody a little better here. All clean. Okay, so this is a little better here. So this white line's 100-day moving average, right? We're well below that. Here's the 50. This blue line is the 20. So we're well below those averages. We're well below this regressional trend line. So I would anticipate if we do get a pop today, we're going to get some resistance. There's a whole bunch of resistance levels that I see that we could have here. First one is 423.48. The next one is this definitely 100-day SMA at 428.87. You're going to get some resistance. So I would say, my bias is for Tesla. If we pop, fade the pops, right? Or ideally, if we do get a pullback, my first ideal pullback is going to be this 414.5, which was November 4th, 2021's high. I would like to take a long there if we did get that pullback right there. So that's something I'm going to keep an eye on as the market opens up. So let's go into the 5-minute opening range trade. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. 5-minute opening range trade yesterday. Didn't give us much until later on in the day, and then it really fell off the wagon for us. So it, for the most part, you had a pretty aggressive opening, trade there. There was about three, I believe off the top of my head, 2.5 million shares. So now, good volume, but lately it's been over 3 million shares. So your range yesterday on the 5-minute opening range was 424.5 up to 430.68. So a little over $5 range. And when you broke it, you broke it on the second 5 minutes, barely broke it. And so when you went down, you could have gotten like maybe where were we there? Lows 423, 423 on the low end. Yeah, so not much. I mean, the low, maybe $1. So the low range for the 5-minute opening range, 424.5 up to 430.68. Excuse me, I gave you a wrong range here. So you had about a $6 range here. So it was kind of chopping around, staying in this range all day, and you really didn't get a break unless you stuck around till about 12:30, and then you finally got that break, and then you got yourself a good $7 break on the downside. So I think that's what's been happening with Tesla a lot lately. Most of the time, earlier or towards the latter part of last year, you were getting this good break. Probably 9:45 to I would say 9:45 to 10 o'clock. You were getting your break, and now lately we've been getting our breaks later on in the day. So you have to stick around to get that good break later on. So that being said, the strike prices that, I moved my strike prices throughout the day. So yesterday, I think I started with 450 calls, and I think I started with the 430 puts. And now you can see where I ended up today, 415 puts and 430 calls. So today, coming in, we're trading at 420, and I use Friday's expiration date. So we still have today, tomorrow, and Friday. So you still have 3 days of expiration. So I'm going to have my 430 calls up here. And I'm going to have my I may change this. We'll see what they close, 415. I'm going to leave my 415 puts up here. And so you can see where we closed yesterday. The 415 puts closed at $5.10 on the premium. And the calls closed at $2.88 on the premium right here. So those of you that are new, if you think the market's going up, you're buying calls. My calls are up on the top here. And then my puts are down here on the bottom. So if you buy a one lot and you want the market to go up, it's going to cost you for one lot $2.88 times 100. It's $288 is what it's going to cost you. So, and then for every dollar that it moves up, it's roughly, because we're 3 days away from the expiration date, it's roughly going to move up about 35 to 40 cents, based on the strike price being about $10 away from the current price that we're trading at right now. So what happens is, so if it moves up $1, this premium price is going to move up about 40, 50 cents, call it, right? So if you buy a one lot and it moves up $1, you're going to make 50 cents on that, which equals $50, right? So also, if you go down in the description and you hit the Discord, you join our Discord community, we do live trading from 8:30 a.m. to 10 a.m., and it's all free. And I go over this 5-minute opening range trade. And in the trade, I also go over some other advanced trades that I take. And the screen that you're looking at right now, this is the screen that I have up in the trading room. And I go and I answer any questions. And I go over when I'm taking the trade, where my stops are, and when I'm exiting the trades as well. And it's not to tell you, not for you to follow my trades, but just to show you what I'm doing and for you to make your own trade book and figure out how to trade on your own. You will not succeed in trading if all you're doing is sitting there with your hands folded, waiting for somebody to tell you when to take a trade and when not to take a trade, and when to get out of a trade. you're gonna fail that way. So you have to learn how to do it on your own. And all I try to do is show people, hey, these are different areas where I take trades, and then the more time you put in, you start to develop your own strategy, your own style, and then you start getting comfortable with your own trade. So that being said, we're going to call it for today. So again, subscribe to the channel and hit that thumbs up button, like this video, and come on in the Discord room at 8:30 a.m. to 10 a.m. for live trading. If I don't see you there, I will see you tomorrow morning for pre-market at 7:30 a.m. Central Time. Have a great